Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra. With me is Ekta as always. And for the markets, it's shaping out to be quite a good day. It's an over 100-point gain that we have on the Nifty right now, almost 120 points. And we're holding comfortably over that 19,600 mark. In fact, we have been over that level for much of the trading day so far. If you look at the broader market, that is completely in step with what is happening. So yesterday, of course, the broader market underperformed. But today, you have the mid-cap, small caps all holding up quite well. And there are definitely some pockets which are, faring better. You have some of the pharma names doing well. You have some of the larger financial names doing well, such as the Bajaj twins, some of the banking stocks as well. But all in all, Ekta, with that big queue out of the way as well, this is looking like quite a good session.
Hi, Pavitra. Yes, absolutely. And then we do have the jobs data, which is due from the US overnight. So that would be something that the markets would watch out for in order to just get an assessment in terms of what the Fed might think. Remember that the Fed is meeting at the end of October, which is on the 31st of October, and hence that would come into play. But nonetheless, we have a lot of stocks to discuss over the next 30-odd minutes. We have Kush Bohra, who's the founder at kushbohra.com, joining in, and Vijay Chopra, who's with us to answer all of your queries this afternoon. Kush as well as Vijay, welcome to the show. Let's get to the first question then. We have Sanjay Kumar, who writes to us from MP. He holds 100 shares of Zomato, which he's bought at around 50 odd rupees. He wants to know the future prospects of his investment. So currently he's sitting on a profit when it comes to Zomato. So how should he look at it going forward? Vijay, let's start with you. What would your view be on Zomato, considering that there is a lot of hopes that the World Cup would actually be a big money spinner for a couple of these companies? So what would your approach be towards Zomato?
Well, good afternoon. Thanks for having me on the show. So I started recommending Zomato when it was about 40 rupees. And, the reason why I was doing it because it has become such a habit to order, food online and, sitting at home. So you get the best of the city's restaurants right on your dinner table. Secondly, Zomato turned its balance sheet green. So that's a big thumbs up to the company and the functioning they are having. Now they charge a hefty fee to the restaurants as well. So there is the income. And secondly, they have reduced the delivery, reduced the payout to the delivery boys. So again, profitability wise, they're doing a good job. I think that, over a period of time, the way the world is going, it's becoming lazy. People don't want to go out, or, going out also has its own issues. So I think Zomato should do well over a period of time. If somebody is holding with a long-term perspective, I think that 150 is quite possible on the stock. And especially, the World Cup and all, they're going to help because anyway, people just want to cling to their television sets and they don't want to move out. So definitely Zomato ordering would go up.
Oh, absolutely. We all do that, right? So switch on the match and order in food. So I can understand that. Vijay, just out of curiosity, any of the other new age companies that you like and you think are set for good prospects in the coming months?
I think that the second company, again, I've recommended it several times, Paytm. That was the time when Vijay Sharma increases his stake around maybe 650 or 600 to 650. I don't remember the exact number where exactly he increased his stake, but it was close to 600 when he started buying. So that was time when, I think I got bullish on Paytm. So Paytm seemingly also is on the path to profitability. And very soon we are going to see a profitable balance sheet. This is what Vijay Sharma was very confident about. So Paytm is the other company I'm fairly bullish on. I think that 1200 is possible with Paytm as well.
Okay, all right. Kush, would you have a view on a couple of these stocks?
Well, first off, thank you for having me on the show. Zomato, to begin with, I mean, I agree with, Vijay, that, there is still a lot of upswing left in this. The stock's actually doing rather well. Even the dips are actually sort of being bought into. The only thing that I'm seeing a bit of a negative RSI divergence. So it will not be a bad idea since, the investors practically doubled his money from, his entry point. Not a bad idea to take some money home. So perhaps, book it partially, book it about 25%, hold the rest for 130 plus kind of levels. So that's the word on, Zomato. As far as, Paytm goes, there too, I have to, agree with Vijay because of the very simple fact that the stock's actually now very close to, the 900, 925 levels, and it's sort of, showing an upswing. So I wouldn't be surprised that, if it moves to 1050, 1100 kind of zones in the coming months. So both the stocks look good. Zomato, as the query was, the idea would would be to book it partially and hold the rest for 130 plus levels.
Okay, got that. That is on Zomato. Let's get in our other query now. We have Rahul Jain, who writes in from Patna. Now, he says he has 20 shares of Suzlon Pharma, which he bought at 300. So, making good money on this one. Suzlon is currently at 565. He's asking whether he should remain invested or switch to some other pharma stock in particular. Kush, your thoughts on Suzlon? I mean, today it's down a little bit, but for this month, it's clocked in gains of around 10%. It's not too far from its highs as well. What is your call, considering that a decent amount of money has already been made?
Correct, Pavitra. So the idea would be to hold this with a trailing stop loss, very tight, tight trailing stop loss of 525, because this rally has come in a very short span of time. There was base formation, and then there was an upswing, which was, which the stock was ready for, and thankfully it just gave that, upswing. It's just that now it seems to be losing some steam. So if I was, invested in this, I would have a strict stop loss at 525, and if that does hold on, then this could move to 625 plus kind of levels. Otherwise, we'd probably see a bit of a consolidation after this sharp up move. And I think the second part of the query was, is there any other stock that you could look at from the pharma space? I think Divi's Labs, after the last year of underperformance, has recovered well, is now gearing up for 4,000 plus kind of levels. So that is also one stock that I would have on my radar from the pharma space.
Okay, all right. Well, Vijay, would you have a view on Suzlon? Because it's an interesting story. We have a PE fund, which is Advent, which has taken over. We have good management, which has come through as well. The likes of ex-GSK, which will be taking the company forward. In that context, do you think that the prospects would be brighter? Okay, I think you're on mute, Vijay. If you could just unmute yourself and continue.
Extremely sorry. The stock has moved up quite nicely. And, whenever we talk about, the management is good or whatever has happened, people have invested, it is reflecting in the stock price. So I would recommend that, when with a CCI of close to about 350, one should start booking profit in Suzlon. So I don't think we should be invested in any case in Suzlon Pharmaceuticals. But there are other companies, I like Sun Pharma Advance at this point of time. If you ask me, which all pharmaceutical or pharmaceutical related companies I like. So Spark is one company which I think is really good at 232. It can go up to maybe about 265, 270. So one can switch to Spark, which is quite promising and has a backing of Sun Pharma, the biggest pharmaceutical player in the country.
Okay, all right. So that's the view coming in on Suzlon as well as Spark. But let's move on then. We have Sandeep, who writes to us from Pune. He holds 15 shares of Shree Cement, which he's bought at 22,000. He asks if he should continue to hold the shares or book his profits and exit at current levels. So what would you recommend on this one? Because this is also making a good amount of profit for Sandeep. Kush, any view on the technicals first?
Well, the stock's actually risen quite sharply, over the last few sessions, or rather, at least the last month, and then it's just gone sideways. Now, if I look at the overall structure across, time frames, it's gone into a bit of a consolidation mode. I would suggest, booking profit at current levels. Even at current levels, I think there's a neat profit there, that can be taken off the table. So, given the sideways kind of move that we are seeing on this one, my suggestion would be at least on Shree Cement to, book profits and take some money home.
Okay, Vijay, what is your call on Shree Cement and the entire cement pack? We have been talking about the price increases. A lot of the construction activity was able to go on longer or, started earlier because the monsoon was not at par with what normally we get. So how would you look at the Shree Cement stock and anything else in the space that you think is better positioned?
Well, I think that lately we had certain income tax related issues with Shree Cement, and from there, when it went down, it started coming up, and it has left gaps also on the technical charts. So I would say it's better if you have profit on the table with Shree Cement, book it. Shift to ACC. I think that ACC is another very big behemoth in cement and one of the largest players in the cement industry as of now. The parentage has changed for sure, but I think that post-monsoon, if you're asking me about my view on the cement industry, post-monsoon, a lot of infra and housing activity picks up. And definitely, when the activity picks up, there's an offtake of cement and steel. So cement would be the beneficiary. This being the pre-election period, so there would be a lot of implementation of the projects which have been announced. So my sense is that, the companies would have very good offtake. The prices have already been increased. And post-monsoon, in the next 6 months, the cement players should do well. So I think that why to be in a controversial company, or the company which has had some kind of issues lately. So better shift to ACC, which is a better placed stock at this point of time.
Okay, maybe a switch to ACC makes more sense. Vijay, thanks for that. The next query comes in from Krishna, who writes in from Delhi. He holds 1.6 lakh shares of Suzlon that he bought at 18 rupees. And he says that he's holding on for the last 5 years. The stock is currently almost at 30. He's a long-term investor and asks if he can stay invested in this one. Kush, I'm sure the chart for this looks quite crazy. By the way, this week also Suzlon is up around 13%. This is not a stock that we talked about, a lot, but what is your call from a long-term perspective?
This is one way of investing for the long term, isn't it? Because the last time around the stock was at about these similar levels was way back in 2015. So some patience and being rewarded here. So now my suggestion would be that since he's been so patient with the stock, and now finally started to pick up steam, my suggestion would be to hold on to this one with a tight trailing stop loss. Don't be in a hurry to book profits, because this is a multi-year breakout that we are looking at. As I said, it's after 15 or rather after 2015 that the stock has breached these levels. Any move beyond 30 will push it further to those 36, 40 kind of zones. So why be in a hurry after being so patient? So all in all, the suggestion is to hold on to this one. Have a strict trailing stop loss at 26. If the stock breaches that, is when I would exit or take some money home. But until then, I would ride this momentum up until, let's say, about 40 kind of levels.
Okay, all right. So that's the view coming in on Suzlon. Well, we need to take a break with the view that the markets are doing well. We have the mid-cap index, which is up around 250 odd points. And we have an advanced decline ratio, which is quite stable at around 2:1. Lot of stocks which are buzzing in the broader markets in double digits. So, for example, PNB Gilts is up around 18 odd %. Kalyan Jewelers is up around 10 odd %. And even something like a Saskin Technologies is doing well in today's trading session. That stock, which has given returns of around 20% this week already, is up around 8.7% in today's trading session. That's Saskin that I'm talking about. We need to take a short break, but we'll answer more queries on the other side. Stay tuned.
Experience the future.
Welcome back. Well, you're still with us on Your Stocks on CNBC-TV18. We have Kush Bohra joining in to discuss the technicals and Vijay Chopra to answer all of your fundamental stock queries this afternoon. Well, let's get to another question now. We have Gitika Kapoor, who writes to us from Delhi. She holds 30 shares of ITC, which she's bought at around 100 rupees. She's a medium-term investor, so she's sitting on a good profit there. And she wants to know what to do, whether she should hold or sell a stock such as ITC. Well, Vijay, what would you recommend? It's a portfolio stock, it's a blue chip, she's sitting on returns. Medium-term investor, should she hold or should she probably take some profits off the table?
I think there is some disconnect. She's not a medium-term investor. The last time ITC was around 100 was 2010. So again, congratulations. She has all the patience to keep.
Maybe she wants to hold for the medium term now.
Okay. But I think that, if you are with a company like ITC, there's a lot of value unlocking which is supposed to happen. So they are, taking away the hotel business. I think the cigarette and the paper businesses would also be demerged. And there are lots of verticals in ITC. I think that it is a deeply valued company. I remember in 2011, Hindustan Lever was close to about 200 rupees, and then the same year it became 900. So I reckon that, one fine day she's had such huge amount of patience to keep the stock for so long. So I think that, ITC can become 1,000 rupees any day. It has that kind of deep value and revenues and cash flows, and the kind of lineage and parentage, and of course an experience of over 100 years. So I wouldn't recommend that, if you have kept it for so long, you should sell ITC. It's kind of a family gold kind of a stock. So don't sell ITC. I would not recommend that.
Okay, so your advice is please be a long-term investor in ITC. Don't look at it for just the medium term. But I get that completely. Kush, your call. Would you agree that this is a stock to hold?
I agree with Vijay on a lot of points. First being the definition of medium term. I didn't get that memo. When did a decade become a medium term investment horizon? But yes, see, I agree. The fact that the stock's actually gone sideways is actually a very healthy thing. And if you look at it from the near-term perspective also, even on some of the momentum indicators, the stock's actually taken support and it's now showing some green shoots. Now it may still spend some time in this 450 to 475 kind of a range, consolidating, but there is no harm. And given that her views medium term, I'm assuming at least a couple of years, given by the record, I won't be surprised if the stock goes 550 plus. So hold on, no reason at the moment to sell unless she really needs the cash.
Okay, got that. That is both the technical as well as the fundamental view on ITC. Let's get in our next query. This is from Manish Patel, who writes to us from Pune. He holds 105 shares of IRCTC at 979 rupees. So the buy price is quite high over here. He wants to know whether he should remain invested or book his losses. This entire railway pack has been moving around, has got a lot of focus right now. Kush, I think the highest for IRCTC was over 1100, right, or somewhere there. What would you suggest to someone who's anyway gotten in at a bit of a high level and is currently looking at losses?
Well, you're right, Pavitra. The high that the IRCTC stock had touched was somewhere close to about 1175ish, and from there on, it's just been a downward move. The recent rally in the railway stocks per se has sort of given a shot in the arm, but it's sort of not participating because I can see at every rise there is selling pressure. So every rise is sort of being used to exit this one. I hate to be the bearer of the bad news here, but I think it's time to exit this one, even though in a loss, because there are a lot of other opportunities that will perhaps go amiss if he doesn't. At least if the view is from near to medium term, this stock could perhaps move up to 720 at best 750 kind of levels, but that will also be a bit of a stretch. So all in all, the idea would be to exit this one and look for more enticing investment or trading avenues.
Okay, all right, Kush, as well as Vijay, we're going to leave it on that note. Always a pleasure listening to your views. Thanks very much for joining in and have a great weekend as well. On that note, we need to wrap up on the show, but do remember to email us all of your questions and we will address them with our experts. Stay tuned. Closing bell will take you through the last hour of trade for the week.